welcome to another episode of Test, Optimize, and Scale. Very excited to have Allen Jebsen from StartEngine here with us today.
Hi, Jason. How are you?
Good. You have been on our list. StartEngine, one of the top portals over the past years, since the beginning of Reg CF, and I believe even beyond there as well too. So I've been looking forward to getting you on, being able to talk about everything that you guys see in the industry, the recommendations you have with issuers, and based upon the success of all these campaigns to date, including your own Reg A Plus campaigns.
Yeah, well, very happy to be here and I'm excited to dive into it.
Awesome. And when we talk about the world of investment crowdfunding, I always enjoy hearing about the stories, whether that is working with entrepreneurs and startups, working in venture capital, basically the path you took to get here, and ultimately the storyline behind StartEngine as well too, to get to these stages here in 2021. Would you mind sharing with the audience a bit about yourself, a bit about StartEngine?
Yeah, I think the story of StartEngine predates me, so I can start with that and then kind of weave in how I came into it. The story of StartEngine was co-founded by our current CEO, Howard Marks, and our chairman of the board, currently Ron Miller, in 2011 as a tech accelerator, one of the standard incubator accelerator models. And really Howard's vision, he comes from previous success building up company Acclaim Games and Activision. And he took a step away from that, I think towards the maybe like late 2000s, 2007, 8, 9, 10. I'm not sure exactly when he kind of took a step back from Activision. But he was always an entrepreneur at heart and wanted to really build Los Angeles into the next great technology startup ecosystem, kind of mirroring Silicon Valley. So they created a simple accelerator model, investing in companies, providing mentorship opportunities to founders, seed capital of 20,000, pretty simple standard stuff. Invested about 50 or 60 companies throughout the years, and then realized pretty quickly thereafter how hard it was for founders to raise future rounds of capital. That's no new to any founder. And just about that time, in 2012, the Jobs Act was written into place by the Obama administration. And that was following the recession of 2008, trying to spur job growth and get small businesses back on their feet. And essentially it reversed rules that previously did not allow non-accredited or everyday Americans with a certain wealth income to invest in private companies. So now that those rules have changed, investors of any wealth status can now invest in private companies, in startups. And his frustration with the accelerator model, but the timing just worked out perfectly, where he read the Jobs Act and realized, if I turn StartEngine, the accelerator, into StartEngine crowdfunding, I can help entrepreneurs achieve their dreams and raise capital on a much larger scale. So that's how StartEngine crowdfunding came to be. And in 2015, we launched the first ever Regulation A+ offering, the first ever crowdfunding offering, when the rules were actually enacted in 2015. They were written in 2012, but when they actually went live was 2015. And then from then on, StartEngine crowdfunding was born. And I personally joined StartEngine, I think pretty much 5 years to the date, early or late January, early February in 2016. And I joined actually through a colleague of mine, Jason, that you know well, Josh Amster. Him and I were working at a previous company together. We were both disenfranchised with the company, the growth opportunities, and we actually just thought we would be interested in that industry, and we realized that we really weren't. It was more of a hobby and passion. It wasn't somewhere we can build a career around it. So through a personal connection of his, he got introduced to StartEngine. And on the first day, they asked him, do you know anybody who is like you that can help lead the department? We were tasked with building out the business development arm of StartEngine. And up until that point, it was just Howard, Ron, and a few other employees. And I looked at the opportunity and I thought it was a no-brainer. And personally, my decision process, I get asked this a lot, how did you kind of jump in that early into a company? It was a pretty easy decision for me. Obviously, I was looking for a radical change, but when I looked at the founding team, I looked at Howard's previous success, his entrepreneurial journey. I thought it was always great to align yourselves with people who've done it before. And then secondly, I think you have to ask yourself when you join any startup, what if it fails? What happens to me? And I looked at this opportunity of becoming a subject matter expert in brand new financial regulations that very quickly will become an important part of how this company how this country helps companies raise capital. So if and when StartEngine fails, I would still be able to have a career as an expert in these new rules. And rules that are enacted in Congress are really meant to stay long term, unless they're quick political decisions. But this was a bipartisan act. This is helping entrepreneurs and helping those try to achieve a different wealth class and status by investing in high growth opportunities. So for me, I thought these rules were going to be around for years and years and hopefully centuries. So if that's the case, let's say StartEngine for some reason doesn't work out, I still potentially can be a figurehead in this brand new industry. So to me, that was the decision process. And I'm lucky to join and take the risk and have a friend like Josh who referred me in. And it's been a crazy ride. And I think we're starting to see in the last year or two the explosion of equity crowdfunding that you know very well.
Absolutely. And I've always enjoyed talking with you and Josh, particularly back in the conferences you guys used to hold, the Founders Summit, some of the digital asset events that you guys were throwing, always at great locations at or across the street from the beach, I may add. But a lot of thought leaders in the space talking about what was to come. And it's actually all happening now. You were sharing with me before we started recording about some of the growth you guys have experienced since March 2020, big date and time in this world, of course, and everything that's happening here in 2021 with the potential expansion and just all the things that were talked about years back. What's it like to actually watch that all come to life?
Well, it's certainly rewarding. We definitely have a lot more work to do. I always say our biggest competition is education. Not enough people out there on the founder side, entrepreneurs know that equity crowdfunding and StartEngine exists. And definitely on the investors side of things, we want as many people to understand that for the first time ever, you now can invest in startup opportunities and hopefully invest in a company that's the next unicorn that you hear. You hear all these kind of fantastic stories of some investor investing $10,000 in Uber and now it's worth 100 million. And you think to yourself, well, shoot, I would love the opportunity to just play that game. And now it's finally here. So it's certainly taken off. I could say over the lifetime in StartEngine, since the five-ish years that we've been in business, we've raised over $250 million, but 150 of that came in 2020 alone. And so that kind of shows you the type of growth that we're experiencing since COVID, and also 2019 to 2020, it's steadily been accelerating, which is really amazing to see.
Oh yeah, I remember anxiously waiting upon activation of Reg CF back in May 2016, then hearing hints, some proposals that were going to come to have these expansions from 1.07 million to 5 million on Reg CF, 50 to 75, of course, as well take place. So I can imagine some of the internal discussions you guys were having around that, as well as your secondary market. And whether we're talking Reg A plus or secondary, have always considered you at the forefront of that. Back to the Elio Motors days for Reg A plus, as well as all of the success you guys have seen for the StartEngine Reg A pluses, the campaigns to actually raise and bring founders, investors, all sides of the table to invest in StartEngine and the growth of your organization. What do you see coming for Reg A plus with the expansion? What do you see for the secondary market? What, of course, of what you can share for some of the plans to what's going to come there?
Well, with the new rules that hopefully will go in effect in March 15th, right now they are scheduled to, but there's some discussions about it being delayed. But I can tell you certainly we're preparing for March 15th
Sure.
as it is right now. I think the real benefit is increasing the maximum of regulation crowdfunding, where you can raise right now up to 1,070,000. It's going to be increased to 5 million. And we speak to so many qualified, more mature companies that are really interested in what we do and the benefits of setting your own terms or working with us on those terms, and the marketing value that is raising capital this way and gaining brand ambassadors and investors that can really fuel your company growth. But one of the limiting factors was, it takes work and effort, and we could talk about the marketing involved that you know very well. But to put that type of effort and only raise $1,070,000 from the maximum in 12 months, for some companies at certain stages, it's just a little too heavy for them. Now, when the maximum is being raised to 5 million, that's where they can say, listen, at 1 million, I was probably going to put maybe 20% of my current fundraise plans onto StartEngine. Now I can do 100% and focus on it. So I think we'll start to see in the industry, not just on our platform, but all platforms, a much higher quality of company that is looking to raise capital this way. And that's only going to benefit the investors that the platforms have. So we can give our investors access to higher quality deal flow and increase their chances of it becoming the next unicorn. But when you talked about the secondary market, the excitement of investing in a unicorn is you invest a small amount in a company at a very early stage, and then it goes and IPOs on NASDAQ. But the chances of that happening and the time it takes for your investment to materialize is really, it's a long, arduous process, and you're probably most likely your investments are going to fail in that way. It's just the one that hits, obviously, gives you such a huge return. What StartEngine just launched at the end of October that we believe is going to revolutionize the ability to invest in startups in the private capital markets is for investors to be able to liquidate their investment either immediately or a year after that they invested in a startup. So typically when you invest in a startup, you have to hope that that company gets acquired for a higher valuation that you invested in, or goes public and launches on a public stock exchange. Now on StartEngine Secondary, you can buy into a startup, and if a company is raising around at a higher valuation, you could potentially sell your shares at that same valuation and make 2 or 3 times your money in a very short period of time. And we can mimic that type of growth in someone's portfolio that you see through a Robinhood or a Schwab or some kind of public brokerage account. Now we can do that with private companies. And on the flip side, to founders, they don't have to incur the costs that it would take to actually list on those public exchanges. You don't have to do the audits and the Sarbanes-Oxley type of regulatory requirements. So we believe it's a win-win for the investors to be able to buy and sell out of their positions and into new companies on a marketplace, even though the company may or may not be raising capital at that time. And for the founders to be able to provide investors that liquidity without the cost involved, and also be able to take advantage of the rhetoric or the advertising, and we can talk about this a little bit later, of buy now because I'm going to be listing on StartEngine Secondary. So it's almost like a pre-IPO round that an investor can participate in, that as of or to date, Wall Street really participates in. Wall Street gets the pre-IPO round. They say, hey, we're going to underwrite this IPO. We're going to help you raise 500 million or $1 billion at this share price, because as soon as you list publicly, we know that money is going to double or triple. And that's where you see these pops in the marketplace and investors making huge returns. So we're essentially going to democratize that access to this pre-IPO round for all startups moving forward.
Amazing momentum, being able to make that available for everyone and really get more investor success stories out there, I think is going to be a huge driver of growth for this industry. And had some conversations with some of the top legal and finance experts, actually outdoor at your conferences, at the Fairmont here in Santa Monica, but about how there's so many great issuer success stories, and you guys showcase them on your site. There's plenty published, but having more of the investor success story, detailing more of that path. And I know there's some companies to point at these days, Beyond Meat and a few things like that. But really looking forward to seeing more of the groups that are on multiple rounds of StartEngine. We're working with a couple issuers, Rayton, who's on their fourth round of different filings, Popcom, two very successful Reg CFs, and now on their Reg A plus. And I know their audience, their fans, are cheering on the secondary market, the opportunities that it's going to make available for them, and really just the win across the board that it's going to be able to hold for your issuers.
Yeah, I think you're absolutely right on the investor success stories. We've had a few companies get acquired or raise their next round of capital from venture capitals or more institutional investors. And that's a success story in of itself, but we're really looking for, that kind of, that blue chip, I invested in this company and now they actually are worth hundreds of millions of dollars. And not only that, but an investor can choose to realize those returns on the marketplace instead of having to be beholden to whatever the company decides. So I think that's going to be massive for, like you said, obviously for StartEngine, but the industry as a whole, because it can draw attention to investors and to all platforms that if you invest in these companies, there is a potential for return at a later date.
Absolutely. I think back to 2017 and my first experiences with digital assets and some of the crowd sales that surrounded that. And every day I was explaining to somebody, personal life, business life, what equity crowdfunding, investment crowdfunding was. Still, in the past 12 months, it's happened less, but still to this day, I'm constantly talking about how it connects startups and investors, various types of issuers and backers. And at the same time, there was investor success stories in the digital asset side of things, and people were telling me what it was on a daily basis. And because of that investor success, I think the same has been true with the retail investors over the past coming up on a year now, with the Robinhood style investor. I know that's a bit of a controversial topic today with everything going on with Reddit and Robinhood around some different stocks. But I think it goes a long way when you're able to have that type of position that grows and then being able to share it. Going to get more into the marketing here, but I know peer-to-peer marketing we look at as the ultimate channel, the ultimate form of promotion. Even when we're seeing advertising conversions come through, if we're able to have peer-to-peer marketing conversions reflect that, that's a massive win and a much stronger return for the founders, for the issuers themselves. So anything to stimulate that peer-to-peer marketing, that storytelling among the audience.
Yeah, I think you're absolutely right. We were talking about before this episode how what we're seeing right now in the public markets with Wall Street bets and these short squeezes that are going on right now, it reminded me of the ICO and kind of crypto craze of 2016 or 2017. The only parallel I'm trying to draw is just how, if you can harness the power of the crowd and have them move forward in one direction, it's overwhelming the type of power that the masses can provide. So I love what's going on right now personally in the markets, but I'm also biased because our mission is also having the access to your to make the decisions for your financials should be up to the everyday person. I think there's always this bias of sophisticated versus non-sophisticated or unsophisticated investors, and those that are termed sophisticated investors are making just as risky decisions as those that aren't. And the only thing that's differentiating them is just their annual income or net worth. And we think that's wrong. And that's why the StartEngine crowdfunding platform exists. But I also, as speaking of one of your companies, Popcom, there's also such a great story with certain issuers and certain companies that, so we call them issuers, but really companies that are raising capital on StartEngine. There are always these great stories of, if a message really resonates with the crowd, it's unbelievable the type of response that comes in. And I know specifically with Popcom and Dawn Dixon, the CEO of Popcom, I think she was on one episode of The Breakfast Club, a popular radio show, talking about not really promoting her company, but really was saying, equity crowdfunding gives those that maybe are minority founders that have a really tough time raising capital the chance to have those from their community invest in them. And not only that, but have those that are in different communities get access to high risk, but potentially high reward investments. And I think after that episode aired, the campaign oversubscribed in a matter of hours from thousands of people. So the power of the crowd is really something special. And it always just gives us, whenever it happens to Dawn or to another company, another founder, it always just reminds us at StartEngine what we're doing and how special the mission is, because there's nothing more rewarding than seeing thousands of people believe in something in the same way and in such full force.
Yes. And Dawn is such a perfect example. Amazing leader, CEO. Every time she's featured, whether it was at the StartEngine conference, various media outlets, not just that first post, but I would watch the social sharing. I would watch 100 other publishers start to repurpose it across their blogs, their social channels, their email, what have you. And that audience, similar to what the Wall Street Bets group, I think they said over 3 million was the size of that audience that was talking about GameStop. I think they're over 5 million as of now because of the growth. But being able to harness the power of that crowd. And in that situation, and working with Jared over there, had the opportunity to spend time with their team down in Australia and map out some of their strategies. We're really just working to amplify what the current traction that they get on any of their rounds, being able to run retargeting ads, being able to find lookalike audiences, things along those lines, because of how effective it really is. And getting into some of the conversations that you have to prep startups, prep founders to launch a campaign on the portal and really plan for success. And also looking at the test the water stage that is going to be coming into effect. As you had mentioned, it's slated for March 15th. We've done this for Reg A Plus campaigns, test the waters, and a pre-launch effort before going live on StartEngine. That'll now be available for Reg CF campaigns, to our understanding. And my mind goes to audience building. How do you build an audience, a large audience? Let's say it's 10,000 or more people who are waiting for that public date. Beyond the reservations, they're waiting to make everything actually come to life on that day, and what that means for campaigns and what they can raise right out of the gate. I'm envisioning campaigns that do 7 figures in the first week and then are on their path to 5 million. What type of recommendations do you guys have for issuers around audience growth or the potential use of the test the waters?
Yeah, I think the test the waters, it's an interesting product. And for those who don't know, there's a period right now currently for companies that are looking to raise more than $1 million, where you can reserve basically interest in the offering before the offering is qualified and it goes live, and it can actually take in the investment. So it's almost like a waiting list or a pre-order type of system, but pre-order for the securities, obviously, that you're investing in. Jason, it's interesting because we've had mixed success with test the waters. And I think companies that have had the most success have already established a rabid fan base or have done other successful types of crowdfunding, whether it's on StartEngine or maybe just rewards-based crowdfunding like a Kickstarter and Indiegogo. But companies that have already established a base or an interest around the brand, they have great success driving reservations to the page. And then on a conversion rate standpoint, in the last couple of months, StartEngine has optimized our reservation process. How easy it is for someone to reserve, the information that they reserve, the communication we send out once the offering goes live, and the steps that it takes to try and increase that conversion rate. When you ask a platform how we feel about Test the Waters, it's more about, well, we're trying to increase the conversion rate from reservation to live. Obviously 100% would be amazing, but it's probably around 50% right now and a little bit growing. But the companies that don't have the brand and don't have the audience behind, maybe you have a different story, but from a marketing perspective, it's hard to find the brand new investor that is so interested in the company upon discovery that they reserve in Test the Waters, and then not only if they reserve in Test the Waters, go actually in and invest, because that's more of like a first mover type of mentality. Whereas it kind of makes sense to us that the first movers are those that have already convinced themselves this is a great company. They probably know of it beforehand, and now they're just excited to be one of the first people in. So I think Test the Waters is a great product for those that have that type of brand. It's a little bit more challenging from a marketing perspective and probably requires more steps along the conversion funnel that's around education of what StartEngine is, who the company is, and why they should invest or reserve now. And I can say another thing that we're looking to build is these types of tiers within our perk system that will try and incentivize those to invest at earlier stages based on how much the offering has raised at a certain point. So in other words, incentivizing an investor to get in at the first 100,000 raised instead of waiting to see how the offering goes and maybe invest at the million stage when they already have seen 1,000 or 2,000 people become investors. So if we're able to incentivize through certain types of perks that if you invest now, even though there may not be the type of wisdom yet, you're a first mover, you're going to be rewarded because you might get more shares for your investment or something like that.
Sure. Incentivize, create immediacy, great ideas. There's so many different stages of the funnel these days, and the funnel reflecting the user journey, the investor journey. And if they get there and there's under 50K raised, under 100K, 250, 500, I know the conversion rate as a rule of thumb increases the higher and higher you get percentage wise into the completion of the round. So if there was something to really push for immediacy in that first 100, I could see that doing very well. And, when we look at the funnel as a whole, and for audience members who, maybe don't work in marketing often, and what is this tube they're talking? What is the funnel that they're talking about? Really taking audiences from a stage of awareness to consideration of the deal to intent, physically intending, hey, I'm going to get back in there and invest in this deal, to conversion, investment.
Yeah.
And then what we're seeing more and more often, second conversion, and being able, and commonly on Reg A Plus campaigns, to have some type of compliant IR process, investor relations process, to build more trust, build more excitement, see that second investment, but ultimately to advocacy, to peer-to-peer marketing. If you are spending on advertising and perhaps getting a $100 cost per acquisition, every $100 you spend, you're getting a new investor. And maybe it's a $700 average investment value, taking into account minimum level investments, taking into account some of the 5, 10, 20K type investors and higher. We're expecting even more so with the accredited investor limits changing in the future Reg CF revision. But that's a 7x return, looked at as great. looked at as a good return. 5 to 10 is generally looked at as a good return on advertising spend. But being able to have 1.5 uh, investors come from a conversion by having the investors sharing with their friends, their family, their peers, and then a percentage of them later investing themselves. Suddenly, there's a lot more peer-to-peer marketing, advocacy, and conversions growing to the round. Have you been able to see that really work successfully on any campaigns you've worked on where investors were getting involved a second time, or just really going above
Yeah.
and beyond in terms of peer-to-peer marketing?
Well, one thing that we've built into the platform is trying to create um, kind of like a members club or a specific designation that um, that gives you that unlocks certain types of benefits becoming a StartEngine investor. And what we call it on the platform is a StartEngine owner. We used to have the perk where if you invest in StartEngine, so to take a step back, our platform helps companies raise money through these regulations. We decided for our own business to raise money the same way that we're telling all these companies to. So we've done multiple equity crowdfunding rounds on our own platform. And we've raised over 25 million to date from tens of thousands of investors. And one of the perks that we included to kind of incentivize people to invest at a certain level is they would become what's called a StartEngine owner. Now we actually have the ability for anybody to go in and buy the StartEngine owner and unlock the benefits. I think it's $275 to become a StartEngine owner. But what that StartEngine owner allows you to do is to have 10% bonus shares on all investments that participate in this owner's bonus program. So we're trying to incentivize this kind of repeat rabid investors, where if you become an investor of a certain designation and you become a StartEngine owner, you're probably more likely to use that 10% bonus and invest in more companies on the platform. And what we've seen to date is the average investor on StartEngine, I think, invests around 1.8 or maybe 2 times on the platform, 1 to 2 times essentially. But our StartEngine owners, those that have this owner's bonus, their average investor rate is 6 times. They're investing on average in 6 different companies on the platform. And I can tell you, I don't know the year stats, but when we looked at last year's stats in the first half of how much we've raised for total on the platform, I can say 40% of that, and I think it was around 50 million or so, but 40% of that came from just the StartEngine owners. And that's a group of maybe 10 to 15,000 of the 300,000 investors that we have on the platform. So I think what's really exciting is trying to grow this owners base, and really platforms of any type of industry. I think it's really important to build this type of this ownership or this kind of brand ambassadorship that unlocks certain potential that to try and galvanize investors to invest more, or people to just be more active on your platform, whether it's investing or any other type of platform.
Absolutely. Absolutely. And that galvanizing is very clear. Love that word, by the way. Was involved in a project called Galvanize at one point. Such a powerful word, and really speaking to the power of that audience. And similar to what we were discussing with Robinhood and GameStop earlier, with the ICOs. And I saw a lot of that community chat taking place on Telegram back then, various other platforms, depending on the international market, of course. But to think that you guys have that among the StartEngine investors, and they're physically encouraged with that discount to participate in more deals on your portal is definitely a huge point and part of the marketing strategy as a whole. I think some of those StartEngine owners even list that on their LinkedIn profiles. So they're identifying as StartEngine owners, which again, as a marketer, I really respect. And, looking at the format of the show, I try to summarize my whole philosophy towards marketing in those three words: test, optimize, scale. And I say test because until the analytics are there, it's really just an assumption, a channel that's being, rolled out. And then as it's validated, can ramp up and, through the optimization process. What marketing channels or marketing formula as a whole are you talking to founders about in their plans? I know Facebook advertising and over at Promote, it's a top channel for you guys. Are there other components, including webinars or email, obviously the StartEngine updates that you are seeing commonly tested to a point of effectiveness?
So primarily it's it's paid social, it's digital marketing. It's something that you guys at DNA are some of the best in the industry and know very well. That's where, if we look to present a budget to a company, that's it's going to be a majority of that budget. What we're trying to test is, we know Facebook works. We know Facebook is the Goliath. I think you definitely know, the recent changes with the iOS 14 and Facebook's attribution, and that's going to cause a little bit of challenges for running these campaigns. But Facebook is still going to be the best channel to test on. Second is probably Google, a lot of paid search. But what we're trying to, move more into is YouTube or connected TV, and even traditional TV as well. If a company can advertise on TV that they are raising money, and the general public can invest, they're probably going to search that company on Google, and then the paid search ad will be, the first one there, and they'll drive right to the StartEngine page, and they'll hopefully become an investor. So we predominantly know Facebook is the Goliath, but we're always interested in trying new channels. And I can say connected TV and TV are ones that we're very interested in. Webinars are always great in theory, bringing founders together and having them really discuss and being vulnerable and answering questions from the crowd or potential investors. We haven't seen it materialize directly, like a direct attribution from those that attended the webinar to have gone on to invest. I think it more builds trust for the entire community to know this company or founder has done multiple webinars, and maybe that lends itself to a conversion for a prospective investor, even though they didn't participate in the webinar. And then also, finding different newsletters that are specific to a certain group of audiences, trade publications, those that already have built the social capital with a prospective investor base that fits the demographic of what a founder is looking to tap into. Those always work really well, but are hard to find.
Yes, I have seen growth that is beyond projections from some different email newsletters and features. Some of the different groups in the industry that have existing historical investment crowdfunding audiences can do very well there. We're also always looking for the next channel, playing around with some campaigns on Clubhouse, looking to adopt Community, Signal, a few other platforms that have been looked at more and more as a new investor hub, have campaigns on Quora. Great to hear about the YouTube as well too. We just mapped out a funnel around that. So glad to hear about some of the new touch points there and updates. And I know your email is actually one of the most powerful channels because of that audience, because of the StartEngine backers. What about if a campaign is not working right out of the gate? We've certainly been a part of Reg CF campaigns that either when we first were brought to the conversation had plateaued or simply were not hitting the milestones they wanted to. Others that marketing did not hit the goals in the first few weeks. By week 6 or so, we then were surpassing all performance benchmarks. And I'm always curious to hear about that problem solving type of whiteboard that occurs. Have you been part of any of those discussions that you could share the overarching dynamic of? Are there
Yeah.
consistent recommendations that you provide if an issuer hits that type of roadblock?
Yeah, definitely. Not every company is a success on StartEngine. We wish it's the case, but just like any type of platform, it's not going to be. So we've definitely been a part of those conversations. They're tough conversations to have. Every founder understands the risks of trying anything. Really, there's a chance of failure. Um, I would say um, the most common suggestion is creative refresh and
Creative.
strategy around creative and what you're kind of promoting and communicating to that potential investor. We've had plenty of examples where we've rebuilt the campaign page working with you and your team and thinking about a different mission or a different story that might resonate. It's still the same company, but we're just pitching it a different way. And all you need is one of those ad sets to work, and all of a sudden you're scaling that ad set and you're doing great. So I would say creative is a big part of it. I also think, Jason, there's a lot of times where companies, they're not doing as well as they'd hope, but they might have had expectations set a little bit differently than they should have.
Sure.
This when we look to founders and we bring them on the platform, we get tons of applications. We can only work with so many because of our bandwidth and resources. One of the things that we actually have and kind of like a marketing statement of who we reach out to and who we want to work with are entrepreneurs who are willing to put themselves out there. And what we mean by that is so many times we speak to founders who are looking to equity crowdfunding as a way that they can just raise a quick round. They don't want to bother, their fans, their personal networks, anybody. And they say, listen, if I can get on your platform, you'll raise me the million, I'll set the terms and I'm on my way. Mm-hmm. And that is not how, not just StartEngine, but crowdfunding works. You need to be all in as a founder, shouting from mountaintops that this opportunity exists. You need to tell your fans, you need to tell your friends, you need to tell everybody, to be comfortable with this being part of your marketing strategy and DNA as a company. It's a part of your brand now that you're going out to the crowd, that you're choosing to go out to the people that support your product versus, the boardroom and the investors, the angel investors. So that is a big part of it. And sometimes we do see that with companies that they haven't been active responding to investor comments. They haven't posted that many updates or sent that many emails to their community because they're still a little bit tentative of doing that. And the founders that always are the most successful, like Don Dixon,
Yes.
are the ones that are very comfortable and very excited to share this with everybody. So that also does come into play, maybe more than you think.
Couldn't agree with you more. And I've heard founders say it was the busiest 3 months of their life, hitting that hard cap and getting in touch with people that they hadn't spoken with since college or any different area of their life. And if they're going above and beyond and putting together first degree connection lists, asking those audiences to back at any level that they can, and more importantly, share with everyone that they know, you can really build a crowd and see those numbers go beyond expectations, see publishers and the portal themselves. I've always looked at the portals as such a effective tool to amplify, not to create, like you said, not to just say, hey guys, put that 1.07 on there for me, but to have the conversations that are already resonating with retail audiences, with angel investors, what have you, but at a much larger scale. So being able to look at that dynamic and manage the tool to a point of effectiveness. And wanted to ask about scale and looking at the StartEngine Reg A Plus campaigns, over 25 million raised, you guys were absolutely, by all definitions of the word, able to scale. And obviously your marketing is advanced. You have amazing partners, Howard Marks, Kevin O'Leary, this powerhouse team. So a lot of working components to it, of course. But whether it's the StartEngine Reg A Plus campaign or maybe a Reg CF campaign that is going to be hitting the 1.07 and is able to increase and go after the 5 million, what have been the most pivotable strategies towards scaling?
I can say every company has a different path. For StartEngine, our scale happened when we introduced Kevin O'Leary, Mr. Wonderful, into our ad sets and into our communication. It is a bit of an unfair advantage, but he lends such a credibility to what we're doing. The audience is perfect. The whole Shark Tank is just so synonymous with, invest like a shark or invest alongside a shark is just so powerful. So from a scale perspective, I think it's about finding the ad sets that work and having the budgets to ramp them up effectively. It's about taking advantage of momentum. And one of the programs that we've put together for all companies, whether you're using our own services or agencies like DNA, is we're putting together what we call an advanced program. It's a zero interest-free loan program where we're going to give companies, do you need 25,000 to ramp up ad spend today because we're seeing these metrics, and you don't have that because you're raising capital and you've got all budget constraints because you're a startup and you're using that for other business purposes? Here's this money interest-free so we can help you get to that point. And I think having the budget and access to that capital to scale, once you test and optimize and see what works, is extremely important. And that's one of the real barriers that we've broken with this program. And we're lending out tons of money to companies who qualify for it and that have really helped their raise, like you said, scale.
Absolutely. Being able to have that type of impact once you know it's working. I know when we're having conversations with clients and they say, hey, $50 cost per acquisition, 100, how do I buy more of this? How can I get more of these investors the following week? There's often that capital obstacle that's part of the discussion. Even if they plan for it, there could be a process to actually get it allocated into the media buys. But wow, I could see a lot more success coming in terms of getting to those $5 million rounds and making that more of a regular thing.
Yeah.
And, to begin wrapping up the conversation here, are there any other recommendations, any other actionable insights that you would share with the audience if they're thinking about doing a Reg CF, Reg A Plus type campaign and starting to put together their own plans?
Yeah, I would say reach out to us. Our sales team is very open. Like I said, I think education is what we're fighting. We're very open to explaining the ins and outs of the rules, making sure it's right for you in this time. But I think one of the things that trip up founders the most is, how do I set my terms of the offering? Do I offer common shares versus a convertible note versus all the other types of products out there? That's something that we can help with. You can look at all the companies that had success on StartEngine, get a sense of their valuation that they've set, the securities that they're offering, how they've put together their campaign page. At this point, we've really raised money for a company in almost every industry. So there's going to be some example for the company or the industry that you're personally in. So you can look at StartEngine and see a couple of them that have that kind of mirror the stage and industry that you're in. So, but please reach out to us at StartEngine.com. You can go to Raise Capital. There's a big button that says Raise Capital on there, and you'll be in touch with a salesperson, within the same day. But I think getting an understanding if this is right for you at this time is a big part of it, because we don't want any company to spend a lot of time, effort, and money in something that we may understand may not be in your best interest. So we'll have basically like a diagnostic test and phone call that's in the best interest of our founders, whether it's right to move forward or whether maybe come back in 6 months.
And definitely encourage you to reach out through the StartEngine site and do so, even if this is just a thought for you. I've always been impressed by the level of education that yourself, Allen, and the StartEngine team are able to provide. I was actually looking at the 2021 playbook and some of the research you guys put together. And as a data enthusiast, have been really trying to go line by line and everything. You guys are at the forefront, over 375 companies funded to date. So as you mentioned, the full spectrum of different industries, I imagine there's a story, an example that you could share for anyone looking to get in contact.
Yeah, absolutely. Yeah, we'd love to speak to anybody who's interested.
Okay, excellent. Well, you heard it here. Go to the site. Want to thank everybody for tuning in. Allen, thank you so much for joining us today. Very valuable insights and narrative that you shared for the audience.
Thanks for having me, Jason.
Of course, of course. All right, we'll see everyone next time. Take care.